Over the next hour, you are going to get the first insight into a small private mentoring group which I've put together of non-traders who are looking to trade just like me. So they're under strict instructions not to look at anything on YouTube, don't even watch my videos, don't look at baby pips, don't look at anything. I want to take these guys to a consistently profitable stage where they can start to get their own private investment. Now, I'm not a fan of prop firms, so I truly believe that if you want to trade with huge capital, you need to get private investment. So that's what I'm looking to do with these guys. Now, it's an hour long, this video. It's going to be the longest video that I pretty much put out there for the private mentoring. It is also not polished, okay? So in this video, we cover stuff like supply and demand, order flow, we touch on order blocks, entry strategies, etc. So it's just more like an overview. They've had only 2 sessions before where we've looked at literally candlestick anatomy, candlestick patterns, and just a general market overview. So throughout the video, there's plenty of gems. I've watched the video back. I've made small edits where I've just cut out like bad language and stuff like that, mostly by me, but it's really decent. So have a look at it. The plan is that if this goes well, and if I can teach these guys how to become consistently profitable within 2 or 3 months, I will polish the delivery and the units which are being put together, and I will create this as an actual mentoring group, so it will be open to the public. Without further ado, let's get stuck in.
Cool. So what we'll do today is, we're just going to go over the basics of market flow and direction. And some of this is like, I'm going to tell you pretty much what we're looking at, but I'm going to ask you to think about, well, just free-flowing thinking of what the answer could be. And the reason for that is, like, I'm not going to give you the answer unless you're really, really, really struggling, but I want you to be able to think abstractly, think outside the box, and think clearly as well. So when I talk about market flow or order flow, what do you think it's referring to? Like, if you're looking at a chart like this, we're just looking at the daily chart on Euro USD. What is there which you can see, which would constitute possible order flow or market flow? What even is market flow?
Direction that is going
in. Yeah. And if you were to draw using the annotate tool, could you just demonstrate on the chart at the moment, like just a basic flow? I know it sounds silly. So your line is sort of diagonally downwards. I know this is going to sound silly, but why is it diagonally downwards? And trust me when I say this, there is no right or wrong answer, because these are the questions that I would ask myself when I was first starting to trade. So I had to think like, why? Like, I can see that it's going down, but what's telling me that it's going down?
It started up here and it's ended down here, and in general it's just going downwards.
That's in a nutshell, pretty much. And is there anything in particular that you can notice about the charts, which is indicating on top of that how it may be going down?
It's going down in little peaks and troughs. So there's like a big dip, then it recovers, then another big dip. If you just measure the dips across, you'll see, obviously, although it does recover in one sense, it doesn't recover from the peak of 2008.
So you're looking at, for example, the dip over here, down to here.
Yep.
Then it recovers, like, not quite as high as that one. Then it goes down a bit further.
Yep.
Perfect. That's cool. Both of you are correct. I don't think you can say anything which is wrong, apart from, well, actually, I don't think there is a wrong answer to it. Perfect. Okay. You two are getting it right. And if you were to, you might not know the answer to this one, but if you were to sort of try to explain what it is which is happening with these peaks and troughs, using like generalized terms, what's happening in that case?
If you look at it from a time perspective, I guess there seems to be, like, although it's a dip, is it taking? Well, I can't see what the time measurement is. Is it going down every 6 months?
Mm-hmm.
Then no, sorry. At first it seems 6 months, and then it seems a bit longer. Then I think the gap between the peak and trough start to increase. If that makes sense.
That's a good observation. I didn't even think about that. Yeah,
Yeah.
so that's pretty much exactly 6 months. And then the climb back up was just over a year. And that drop was about 3 months. Then this climb was about a year. Then that drop didn't quite. Yeah, okay. Good observation. Yeah. So effectively, you're looking at, for example, like the
Yeah, the
climb.
frequency. Yeah, the frequency of the drops
Yeah,
and the peaks.
that's cool. So we've got, if I draw on here as well, I'm going to use the annotate tool as well, just so I can fit in. So you were looking at these. Sorry, I don't know why my computer's like, or my MacBook's getting a bit funny, so it's jumping every now and then. So you're like looking at these types of that type of movement. So with that, both of them are correct, by the way. Both of the examples of what you said are correct. But if you had to explain to somebody what constituted a downward move, what can you see that it is definitely doing on the chart to prove that it's going down? Apart from Sarah's overview, which was starting at the top and so up here was evidently top part, and then at the moment it's ended up over here. What else can you see that it's, if you were to explain to somebody that there had to be like a mechanical thing that you're looking at to say, right, it's going down because X happened, what would that X be?
Is it the recession in 2008?
No.
It's different levels of supply and demand.
Yeah, very on it, very close. Yeah, levels of supply and demand. And do you know where those would be? Because it
I
was.
struggle with this.
No, don't worry. There's no don't panic.
Because I've watched your videos about it, but it's still not quite clicking it. So when it's moving up, there's a lot of supply in the market, people are buying. And then when it goes down, no, sorry, it confuses me.
Don't worry.
Sorry.
Just think, I know what's a really cool product. Oh, just think of those prime drinks. When the demand was outstripping the supply, what happened? People were selling them for like 10 quid a bottle, and it was basically drinking Ribena. It's like 10 quid for Ribena. What?
Oh yeah, so when demand is high, the price is higher, and when demand is low, there's loads of stock to buy, so the price is lower. Exactly.
It's like, just think the housing market, what happened during lockdown. It's like there was no, especially for the investors market, like there was no supply, so everything went up in price. It was like possible, no one was moving house or anything. It's like, oh god, like the whole thing dried up. So essentially what I was trying to get to, so the supply and demand, supply and demand, just the peaks and troughs in the market, like these bits are essentially where you could draw out the supply and demand. But what I wanted to try to get to was, well, I'll probably just say it at this point. I'm just going to clear everything off. Oh, that's what I've actually drawn on with, sorry, still getting used to this annotation thing. So I use the same colors on TradingView. Essentially, what's happening is we're getting breaks of structure in the market. So it's only when I started teaching people like Jack and I think you, Sarah, as well, and like the original 6, like the Sigma 6, it was a case of I had to figure out, right, if I'm to explain to people what is actually constituting a down move, it's okay going like that and drawing a line downwards because there's a starting point, there's the end point, because technically it's correct. But if I wanted to see an upward move or a downward move faster than that, what needs to be happening? What do I need to show or demonstrate what is happening?
The lower lows.
Yeah, exactly. Yeah, so a break of the previous lowest point of any move. Now, I used to get confused. Okay, so this was only a couple of years ago, and I would class this as a low in the past. I would class that as a high. And even though technically they're in their own like subsection, but we won't get into that in this video. But essentially, you know, for this low to be broken before this high, that would constitute that there's a downward move, because price had come up, and as Jag pointed out, it didn't quite break, it didn't break upwards. It ended up coming back down and then breaking that low. And as soon as that low had been broken with a sustainable move, which is usually with a body break. So if you remember back a few sessions ago, we were going through, like a candlestick shape. There's the body, and, there's usually a wick either side. If you've got a wick, just remember that a wick is demonstrating that price did go up there. The body was like that to begin with, it was filled in like that. But then before long, the market pushed against it and pushed it right back down, or, came back down towards the body. So generally speaking, we want to see breaks of structure with a body just to show that momentum's going in the correct direction. Because if there's a wick and it pops back into the zone, that shows that there might be buying pressure, rejecting off an area like this. Just on that, I'll just check and see where your abilities are at the moment. If we did have that instance, let's say, for example, price came down, this was the low which we were looking at. If price came down and went like that, what would cause price to do that? Basically dip down a little bit lower than the previous low and then pop back up and do its own sort of rally again. What would be happening in this bit?
Sorry, is that a dead cat bounce?
Yeah, actually, yeah. I haven't heard that for years, but technically, yeah. Yeah, it is.
Okay.
But what is it?
Well, okay, so with the dips, then if you look at the timings of it, from what I can remember, I think, I don't know, in that period, what I think is, was there some quantitative easing that took place?
Yeah.
Could that be it? And then obviously that kind of meets the supply issues, and then obviously the demand dropped off because there's too much. Could have done too much of it because the pendulum went too far the other way. So look up between the two dips, it's about what is that, 18 months, 2 years. So in that time period, obviously there would have been, I think I'm trying to think back to 2010, what was taking place then.
Yeah.
I think the Libya war started, but then
I remember that. Like, I basically just started work in the workplace. Had I graduated? Actually, I don't even think I'd graduated at that point. Maybe I had. I don't remember. But yeah, there was definitely QE happening. I don't know if that would be good or bad for currency, especially, euro versus US dollar. So we're not looking at the pound at the moment. But it probably happened in the US as well, most likely. But what you're talking about is known as a fundamental in trading. So a fundamental is looking at like the macroeconomics, so global economics. Whereas, and that it's good to know that stuff. Like, I use that to influence where I think that the market is actually going. Like, even though I probably shouldn't say it, because if I'm going to use this on YouTube, let's just say the group in charge at the US at the moment don't come across as particularly good at anything. They are propping up their economy quite well, so it's making the dollar really strong, and I don't know how. But that will help influence my trades, thinking, well, really long term, the US dollar is looking like it's going to be getting stronger, which means against the euro, which looks very much in turmoil, and we've got on our borders, the euro is probably not going to do very well, especially against an economy which looks as though it's doing all right. So euro USD fundamentally is probably going down. US dollar stronger, euro weaker. That means that, with the euro being at the start, so EU is the trading term, it should be going in that direction. Euro being the lead, US dollar being the, I can't remember what it's called, but the second one. this is a direction where Euro USD should be going long term. But we can see on other charts, which I'll jump down to another time frame in a minute, but all of this happens, it's pretty much repeatable on every time frame. So we could be looking at a 1 minute chart, for example, which means that the generalized fundamentals won't matter as much. So we look at the technicals. So the technicals are candlestick patterns, chart analysis, supply and demand, stuff like that. So fundamentals, really important for longer term, and also where the flow of the market is quite a lot of the time. But you were pretty much on it when you said dead cat bounce with this. Oh my God, what is wrong with this Mac? It's just started going really slow the last couple of days, so it's like bouncing. But essentially, what's happening here for the market to press down and then come back up, even though it didn't break the high over here, what did this bit do to this bit? What was under here?
Liquidity.
And can you remember what liquidity is?
Orders that are sitting there waiting to be used.
Exactly. Yeah, spot on. So what kind of orders are they?
They put orders. PUT, put orders, where people are saying
puts
that
and,
they think that's the dippity dip of the dip. So they think, right, the only way is up now.
Pretty much, yeah. So in Forex, we use buys and sells rather than puts and what's the opposite of a put? I might have to Google that because I literally only trade Forex rather than anything else. But yeah, kind of, yeah. So there's buy orders and there's sell orders underneath literally every candle, but especially in key areas where the market has removed from. Because if you think about it, in order to shift any kind of spike in the market, there needs to be, especially when you can see it, and success leaves clues. Like a lot of these spikes are done by big shifts in the market, usually news events, which we'll go into at a later point. But essentially, there's buy orders, there's sell orders, and there's just an enormous amount of volume going into the market at these areas. So just below them, like imagine just below here, what type of trader will be looking to get short? So if price was to go to, like it did over here, what are these guys down here called? The ones who are selling below here? Because what they'll see is a range. You know what? I'm going to tidy this up. They're looking at that potentially, and they're waiting to sell out of here. What do we call that? You might not know actually. They're the breakout traders. Okay, so the guys are waiting for a breakout of this range, this box which has been created. So they're looking for a breakout, because there's going to be sell orders underneath here. There's going to be buy orders. So people with their stop losses underneath there. So the ones who are expecting that market, probably not on a daily, but on other timeframes anyway, the ones who are expecting the market to go up and break this previous high and take their profits, they got really close. Price came down. There was a chance for other people to buy back into the market. Price rallied back a little bit, really slowly. First indication that it's not going to make it is that it's a real slow. Like Jag, you touched on it a second ago. Like the pace in which it's coming down versus the pace in which it's recovering. Very good sign that order flow is not going in the direction which you want it to, and then price does break down and crash through. So
there are always orders left behind, whether it's the low or the high.
Yeah, there's always orders left behind.
Okay.
So absolutely spot on. There's always orders left behind. So with these key areas, I use them. I call them blocked orders or order blocks. If you Google order blocks or go on YouTube, there's a lot of misinformation out there. So maybe don't do that. There's certain things that constitute a good order block, something which makes order blocks stand up and work. But then there's other things which don't. So I've done it before as well. Like I've mislabeled it, but I've mislabeled an order block as I've mislabeled supply and demand as an order block in the past. But basically, just think blocked orders, people stuck in the wrong direction. There were still people down here selling. There were guys there trying to get short, and they were humbled by something which drove the market up in the end. But essentially, when we're looking, what we're doing.
Sorry, really stupid question. What does that mean when you say get short?
Oh, get short means go down.
Oh, okay.
And get long
That's
means
simple.
go up.
Okay.
Sorry. So puts and oh my god, you know what? I'm gonna have to Google this. I can't remember what the opposite of a put is. Is it a sell? Puts.
I think it is a sell order because you get put orders and sell orders, isn't it? So I reckon it is a put. But you know what I was gonna say?
It's
Paul,
a call.
the only difference I've noticed as well is that the first dip, if you look at it, the V, like the not the V, well, like that valley, yeah.
Yeah.
So even so, if you go back to the first one, the first dip, the valley actually gets wider each time. So if you look at that, so yes, if you look at the first one's narrow, gets a touch wider, then at each point, like the valleys actually getting wider and wider apart. It seems. I don't know if that's just me, but the valleys are getting wider. If that makes sense.
Good observation, man. Yeah, I've not even noticed that. Yeah, like what, there to there, there to there, there to there.
Yeah, but I was gonna say even at that point, like of the actual rebound in the first one, if you look at the very first drop, right? If you look at the first line that goes up next to it, that's quite a narrow V. That's it. There between that and that, that's really narrow. Then obviously, if you look at the next ones, then it seems to be like, if you look at the one that's in 2010, just after 2010, that one seems quite wide.
Yeah, good point.
Yeah.
Good observation. Like, these are things that I've not noticed. Like, I've never noticed it.
Yeah. So I was gonna say, yeah, so when this happens, right? Yeah, say for example now, if you're a trader and you get word, like, like the GameStop thing where someone telling you this is about to happen, everyone piles on, they make it drop, then they think, right, okay, it's dropped enough now. Let's now make it go the other way. Is that what's going on? Where they all kind of that swing trade, you see which way like the wind's blowing that day, and then they pile on and then they pile off.
Sort of, yeah, to an extent. It's one of the things which add to it. So just think, like, the key thing that has to drive the market is supply and demand. It is literally, do I see value in it at this price? If I don't, I need the price to come down before I can start buying it. And then let's say that, I don't know, let's just say that we buy something down here, or we're waiting to buy it at that price, and price starts off at this level. Okay, price finally comes down to our level and we can buy whatever it is that we want. And we think, look, it's going to be maximum price over here. Okay, so price comes down to where we get in, we buy, great. Price goes up to there. What do we need waiting for us to exit the market up there? So we're willing to sell at this price. What needs to be the other side of our sell? Buyers. So there still needs to be somebody else thinking that the price is going to continue up, so they're buying it at a price which is, of decent value to them. But generally speaking, we've done our move. We've waited for price to come down to us, okay, from the current level, before going up to the point where we think, yeah, okay, that's about it. And then these guys, the guys who bought it, are probably going to be the order block. They're going to be the blocked orders, because where we get out of the market is dependent on what had happened previously on the charts. Okay, so we're looking at like these key areas of supply and demand, because there's usually a very strong sell-off, an aggressive sell-off. Like, look at how fast some of these spikes down are going. So Jag was absolutely, on point with a lot of this. The speed in which price is shooting down, from here before it comes down and, starts doing that. When price starts recovering, if it does start recovering, we're just waiting for these guys to be like, oh my God, like, is price going to allow us to get out the market at the price that we bought in at? Because, they're the Bitcoin 2017 guys, or 2018, whenever it was, which peaked. It's like, oh my God, I just need to get out, break even. So, in their example, we could pretend this is the Bitcoin curve, because usually in Forex, what will happen is all of these trapped orders, they're fucked. Like, as soon as we get a break of the structure, so the previous low, we know that there's a stronger chance that this order block up here is going to work for us to get short from again. And why would we be able to get short from this area up here? Because they're now looking to offload their positions, aren't they? They're looking to get rid of their buys, which means that we need to be able to sell. So they've still got to sell, but we've also got to sell with them. So we can short the market really fast and then continue to break these lows. So whereas with the Bitcoin scenario, let's try and go back a little bit. With the Bitcoin scenario, what had happened is that there was a lot more demand in the market, especially once price had gone, it went low for ages, didn't it, for like a couple of years, and then it came up again. It got to this point where there was all the previous guys who were just begging to get out of the market because they bought in at completely the wrong point, just where the market started tanking. That's when they got Jordan Belfort on the news, and he was like, "Get out! It's a bubble! It's a bubble!" And the news anchor was like, Jordan, what do you know? Like, it's just gone up another $600 in the few minutes we've been talking. Then within the next day, it just completely crashed. Like the guy might be a complete, but he certainly knows how to trade. So essentially what had happened was when price started rallying and coming back up, all these guys were selling. They were getting rid of their positions really fast. So the guys who were trading supply and demand and support and resistance and stuff, we knew that there was an opportunity to get short temporarily or possibly just get short before we start buying it in at a discount rate again, because clear all these guys out of the market because they just want to offload their position. They're the new order block. They're the sad guys who, they see it drop down a little bit and go, "Whew, okay, I made my money back, or I got break even, or whatever." And price is going back down now, so I was right to get out the way. And they might even go short. They might say, "Oh well, clearly it's working its way down. The market's, I'm doing right. I'm going to short it. I'm going to make money when it drops down to zero." But the real guys who know the actual value of the item, which is basically just a made up currency, which is quite smart, because just think of it as a stock essentially, because there is a finite resource apparently. These guys who are buying in here knew that it's valued more, but they knew that the market had to drop a little bit after it got to here before it pushes up again. So these guys who got long before are probably the guys who got short around here, because what's this become over here? The exact same as what this was before. Okay, so these guys were the trapped orders. Now the ones who got short from there are the new trapped orders. Okay, these are the new order block. So we wait for price to come back down to this area, get involved, and then go again. So what we're doing is we're literally just measuring supply and demand. Now, the difficult thing is with Forex is that we don't have the tools available to us to measure supply and demand in terms of using a DOM, but it shows you all the resting orders. Okay, with stocks, you can do it. There is software out there for it. I think there probably is for crypto as well. Just for some reason with Forex, as far as I know, we're not privy to those tools. So all what we can do is go based off of candlestick patterns and order flow. So with supply and demand, to summarize supply and demand, it leaves particular areas which are really obvious in the market. Okay, so market will come up to a particular high place. You know what? Should I change the color of this? Because that might be quite difficult to see. Red, is that better? Bright red. That green. That green. It's quite difficult because we're kind of looking at black, aren't we? So can you guys see all the colors anyway?
Yeah.
I know what. That's better. We'll just use a fatter thingy. So the market normally comes up to a particular area, starts consolidating, and then drops off like a cliff, so it drops off like a cliff, and we wait for price to come back up to these areas, and we analyze what happens within here. So when price does come up, which maybe it won't ever get to that price again, but if it does, we just go based off of particular candlestick patterns which indicate to us that the market is ready to drop. Okay, so we could be looking at a candlestick formation like this, or we could be looking at a bearish pin bar like that, which has swept liquidity. We could be waiting for another candlestick formation, something like this. We could wait for a sweep of liquidity using that, so that will sweep whatever's to the left, and then a massive dropping candle or an engulfing candle which sweeps liquidity and engulfs that one. And then we can wait for a pullback into this area and get short again, which is pretty much what's happening there. So what's happened with this one, okay, for example, with this supply area, just thinking with that, price had to come down and break this previous structure, which we've seen before, okay? So price has worked its way up, got a little bit messy, came down really aggressively, gradually worked its way up, didn't break this high or didn't even get into this supply zone, and then it started aggressively pulling away. Then when we got a break of this took me years to figure out that this high over here, which is unmitigated, is still technically in play, but there is a new high on the chart, because we just now need to look between, the previous low and the new breaking point and identify the highest point between those two areas. Okay, so we just mark that on our chart as our new area, basically our new high or our chalk line. But within here, within that bit, if I zoom in, there are going to be order blocks. There's very clear supply coming into market because the supply is shown by the aggression coming out. The candlestick formations will demonstrate that there's order blocks there. And then all what we do as our style of trading is we wait for price to come back in, get into this area, react from it, and then we can start our sell. So if we start a sell from there, pretty much looking at this chart, where would our target be? I know this is looking, years and stuff, but it's exactly the same with the 1 minute, the 15 minute, 1 hour, etc. But where would our target be if we managed to get involved with this trade right here? Where would we look to take profit? Because our stop loss would be just above, just above that highest point. So, we'd be looking to get involved. Oh, this probably won't show up properly. Oh, it does. Our stop loss would be up there. Where would I want to put our take profit?
It's something to do with the previous low.
The actual low?
Yeah.
Yeah.
I think.
Yeah, you're right. Yeah, it would be a break of the previous low. And why would it be a break of this previous low in this instance? Why would we have more certainty that we're going to break this previous low?
Because we're in a downward trend because we've already broken the previous low before that.
Exactly. And what did we not do?
We didn't create a new high.
Bang on.
Exactly. High.
Exactly. That's exactly it. So all what the market's done is it's worked its way up. You know what? I'm going to clear my chart again. All what we've done is we have gone up. Oh my God, this Mac, I need to reset it or throw it out the window. Work it. Sorry, up, down, up, didn't break that high, came down, broke this low, price went up, reacted from something, which gives us a good indication that we're probably going to continue with our downward trend, given the aggression that came out of there. Came down, didn't quite break the low, then broke the low. So, we would have got our take profit if we were using the, 5-year trades. But generally speaking, that's it. Like, that's how to trade supply and demand. All what you're doing is following the direction of the market. And we use usually lines, just a line just to show where boss and chock are. So that being boss, which stands for what?
Breaker structure.
Yeah. So breaker structure there. And what would this be if we break that? Like, still it's it's still structure right there. It's just the low of this leg. Okay. But what would this be called in the, I think it's an SMC phrase, but I think it's also generic now across trading. But it's also a breaker structure, but it begins with C.
Was that the chock because we're changing the direction? It's
Yeah.
a change of character.
Exactly. Yeah. And what does it mean by change of character? What's the character that's changed?
The direction that the market was going in.
Exactly. Yeah. So it's changed its mind. So if the market comes back down like that, it's indicated to us that it's run out of steam. It's already got a breaker structure. It could be 1, it could be 10. We don't know. Breaker structure. What happens to what happens to this one over here when we get to it?
It's the breaker structure.
This one over there. Yeah, technically.
Because it's creating a new lower low. So does that then become the change of character again?
No, sorry, I kind of did a trick question. It was a bit.
Don't do that for we're new.
It only took me to a couple of years ago to figure this out. This becomes a trap. So essentially, we've had our change of character at this point. The market has decided that it's broken its previous main structure. Okay, so the main structure previously was that price came down, worked its way up. It reacted from something on that previous leg. Whatever it was strong enough to continue upwards. We came down, we broke this level. All what's happened over here is who's looking at this bit over here, because we were looking at one. Let me clear these off, and we're going to pretend that there's order blocks over here, right? And so a reason to get into the market, an order block over here. There will be an order block there as well, most likely. So what usually happens when price reaches this area, the second one, the one which is unmitigated, like what would usually happen? I sort of drew it on the other chart a little bit, sort of explaining Bitcoin as a bit of a hint. Kind of. Who else is looking at that thinking?
So it looks a bit like a pump and dump, isn't it?
Yeah. Essentially everybody's looking at this because they know that there's an order block here. It looks like it's unmitigated. Essentially everybody else is looking at this last bit thinking that it's really relevant to our new leg which has been created. But the fact is, at the end of the day, our structure was this one, all right? And we've already broken it. So everything else is old news. It's now just old supply and old demand, which means that there's likely going to be some orders left in there. Instead of it being 100% strength, it might be 20. But you've also got new orders looking to go into it and bounce off of it. So you've got people looking to buy. You've got breakout traders waiting the other side. Okay, so you've got people waiting down here for the market to continue down, and that's okay. So when we come into these zones, like into these secondary, like old zones, there's a couple of things that could happen, and quite often you do see it happen, is that price will come down, literally tap it, like, just tap it, and then pull off a little bit, and then go down and break through again. Or it may well just slightly break through and then come back again and then break down again. Okay, but we need to remember who is getting long here, like who is trying to buy in this position. People who are wrong, effectively, like the guys who are bought off of the bounce of this were wrong, which means that there's a strong possibility that they are still in the market in the wrong direction because they were trying to buy. Wrong button. They were trying to buy. So
the chalk is what is the key information there to say that the direction has changed, therefore we don't want to go long there.
Spot on. Absolutely spot on. And it's people who don't understand chalk. This is chalk. This is old. It was chalk once upon a time, but it never got used. It didn't get used up. It would have been the chalk line, when price was pulling back there. Great, we get that breaker structure. The only time where it would be used as chalk is on this downward leg, but we bounced off something else. Going to pretend that there's an opposite candle or just something random. News event, price goes up. Therefore now new chalk line is here. Price comes down, change of character, body break, happy days, press into this old zone. The uneducated traders, not just uneducated, some of the bigger stuff as well will get long from there. The guys who then go long, they're stuck in the wrong direction, because where's our, as soon as we get this change of character, where does our new chalk line go? Like, where's our new, for chalk to occur again, which part needs to be broken? Is it that one, or is it that one?
The high,
The high.
because we're currently in the low. We're currently
Exactly.
in a. Is it so? If it is going down, do you generally call that a bearish market?
Yeah, spot on.
The-
So we changed
The
from
change of structure is going down.
exactly. So we went from bullish up there to
Yeah.
bearish down here. Okay.
Okay.
This line alone just made it a bearish market. Even if we haven't broken, say like we started off from down there and price had only got to like here.
Mm.
This is a bearish leg. We're on a bearish leg. Okay. So this leg here is, well, that's the leg. It's just called a leg. Basically, from the previous turning point to where we are, we've broken the previous structure. That's enough for us to say, okay, the market is likely reversed. Like, there's nothing stopping the market from going up and, passing through that area again.
Which would be another chalk.
It would be another chalk.
Okay.
But we have from our statistics that doesn't happen very often. I can't remember the exact figure. I want to say it's about 20% of the time. It might be a bit higher than that, but I think it's about 20% of the time. So we do know, though, that after you've got chalk, usually chalk with a wick break, bizarrely, you tend to get boss. I think it's 82% of the time, which is quite high, which means we're expecting the price to pull back a little bit and then break down again and get that initial boss, break of structure. Because break of structure is pro trend, chalk is counter trend. Because it's just going back on itself. Break of structure is continuation of the trend. And the way which we trade is literally just, oh man, I've drawn too much on here. The way which we trade is literally, there's only two things really. There's a trend continuation like that, because you get the breaker structure going upwards. And all what we're doing is we're trading pullbacks, and we're identifying certain things. There could be multiple of these, by the way, multiple of these areas where we might identify on that previous leg, because we want to see the market pull back, because we want to be buying it at a cheaper rate than what it currently is, right? So we could wait for price to get back to there before breaking off, or back to here before breaking off, or back to here before continuing, But the other way that we trade, so that's just trading a pullback / continuation, because the market's continuing, but it has to pull back first. And the other way to trade is wait for that change of character to happen. So for all of those previous areas to fail and not do their job on pushing the market back up again. And then all what we do is, we ignore those and we identify new ones on this new leg which has been created. Oh my God, this Mac, I don't know why it's going slow the last couple of days.
Mm-hmm.
We're just identifying new areas on this new leg to say, is it going to be there where we continue? Or is it going to pull back to there? Or is it going to pull back to there? And that's what we're doing. But some of the key things which we spot in the market comes down to previous supply and demand. So with this structure, for example, which we drew out, a bit messy now, essentially, we look left on the chart, because if we look at a higher time frame, sorry, this is going to get messy. If we say that this was we'll say it's a 4-hour structure. So each line represents 4 hours. So 4 hours, 8 hours, 16, 20, 24, 28, etc. But this was a weekly order block, so it'd be like this over here, but just representing a week. And we get this structure occur within that weekly order block, which was an area, in this instance over there, of supply coming into the market. And we get this happen on the lower time frame, which is the H4 in this scenario. That means that we definitely want to be getting short, at least to the next area, which is either going to be a break of structure or chalk or whatever, which would be, if it was this trade, this one, to there. or if there's another key area of demand in the market from the past. So an area which may have been a struggle for us to get past. What did we bounce off in the end with this? Just going to have a look and see if we bounced off an order block, because that would be quite nice if we did. Not massively. Although, is that a downward candle? That's an upward candle. Yeah, okay, it didn't react off of one, but you know, it would have been nice if it did with that. So essentially, just to try to summarize things, because I just realized I've got to shoot in a second, ready for the next call. Let me just clear off all the annotations. For us to be able to draw out supply and demand in the market, how do we, just to summarize, how do we quantify when the market is moving up or down? So if we say it's a bearish market or a downward mover market, what does it need to continually do? Or what does it need to do just once?
Break the structure.
Break the structure. Yeah, exactly. It's just a break of structure. And what usually signifies a demand zone or a supply zone? What normally happens to show that is there? Like what happened? Let me zoom in. Let's see if this will make a little bit more sense. What has happened right here? Like price worked its way up, and then it came down.
Industrial candle pushing it down.
Yeah, it's aggressive, right? It's a really strong candle. It's left behind the imbalance. It's obviously likely a bad day in the news. It's dropped 200 pips in a day, which is a lot for Euro USD. It's clearly showing that supply has come into the market. We got is that a break of structure? I don't know if it was or not, but I can find out. 1 for 1, 2, pretty much almost mitigated there. We got chock right here. What? No, we didn't. Ignore me. We got chock down here in the end. So our order block for over on the right was technically this whole area, massive area. But we got the imbalance right there. So we could go right off the top. I wouldn't recommend it. But this was the order block. And then price came back and retested it. There we go. Hit it right in the middle. Then worked its way down. So, and then we had it again, didn't we? It's the same chart patterns. They happen over and over. There, therefore we get chock here. Then we had the big sell-off with that candle. That means that the order block, to be fair, it didn't get re-hit, but the order block is that. Didn't get re-hit. This one kind of did with that. This one did with that. This one got swept, but that one got reused, and then work our way down. So essentially what we're doing is we're identifying those key areas of supply and demand by what the market does. And what the market did was it left a big clue. It left imbalance. Now, imbalance just shows a lot of aggression going in one direction. Just huge orders going in one direction. If we drop down to, like we probably can't with the trading view stats, but if we drop down to a lower time frame like the 15, I can guarantee that the market is like going like this all the way. So it doesn't look like any imbalance. But on this time frame, we can identify that on the whole for that day, it was just sellers, pretty much just sellers. So we need to look at what had happened just previous to it. You know, where did people start going in the wrong direction? Like, where did they actually start getting stuck in? Really, it was kind of like there, or it's here, going up. So sell off, push up. It's kind of there. But we're just looking for the same candlestick formations, because on a lower time frame, I'm going to see if I can drop down to a lower time frame here. See if we can drop down to like 4 hour, hopefully. Yeah, okay, cool. So we could drop down to a lower time frame to get a pinpoint entry if we can. That was the daily boss line, which means that our chock line, it's still the same, unfortunately. first indication that it's going to go is internal chalk, which we'll do, you know, on another day. Where is it? Been a while since done bar replay. Gonna do one tonight. There we go. There's the candle. So this is left behind. Oh, based on what I said before, whereabouts is the order block? Where are the guys stuck in the wrong direction? Where does it start from?
I'm not sure if it's this one or this one, and then the high is that one. I might have that completely wrong.
Yeah, kind of.
Completely wrong.
No. Technically speaking, yeah, it's this and
That
that.
one.
But what else had happened within there? Price had started working its way down from there. We got a nice engulfing candle, so good sign number one. Price tried pushing up, and then it severely dropped. So really, the guys left behind, the actual order block is the last push. There to there. These are the sorry guys, the ones who are like, oh no, and then go on. Don't know if price actually comes back to retest that. Oh, probably have to go to a different time frame. Don't think it does. No, it didn't come back in. Sometimes it doesn't, sometimes it does. But generally speaking, all what we're doing is we're identifying where those key areas of supply and demand are. So, you know, supply came into the market around there. Once price comes back to it, you know, why does price come back to it? That's a whole nother story. But the chart formations, the candlestick patterns, they occur for a reason because they're telling us the story as to what's happening. Look at where the wicks are at the top along here. That's indicating that the market's trying to push up and getting pushed down every time, you know, starting to push down as well, which means that there's buyers and sellers coming into the market. It's consolidating, and after consolidation, normally, especially within a previous or a higher time frame order block, aggression, like severe aggression, which is what happened here. So yeah, 292 pips in a day. That was just from the start, so probably 320. 386 for the whole day, the range. That's crazy. For EU, that's mad. What was the date? 5th of May, 2011. Can't tell you what happened back then. I don't remember. But generally speaking, price came back up, tried to retest the area, didn't manage to do it. Went down, didn't quite break this low, came up again, just retested the previous area of supply. Or, you know, the last bit of demand pushing up. Or is that down? No, that is down. That's actually a black candle. So it's just rebalanced and then it's off, it's gone again. But essentially, supply and demand is what feeds the market. It's people thinking that price is too cheap or they think it's too expensive. And then there's multiple factors which go into it, which is liquidity. You know, so resting orders above and below candlesticks. And then there's the breaks of structure. So what I would recommend for you to do, you know, Jag, do you have a TradingView account? Like, you can do this on the free version, by the way. You know, if you guys have it available, I would recommend.
I don't have it yet, but I'm looking to. Obviously, like, I've kind of waited everything until you say it. Basically, obviously, if you told me that.
Superb. All right, brilliant. I'll send you a link to it. But yeah, just get the free version for now. No need to pay for it. I think it's like 10 quid or 12 quid a month or something. Don't need to pay for it just yet. But essentially, all what I would do is I would go back on a particular time frame. Doesn't matter what the time frame is. And you can change it instead of it being candlesticks. If you want to, just to make it easier, just use a line chart. Right, so line chart just smooths it out a little bit, so you can mark out where the highs and the lows are and stuff. So you can just identify, right, really, really simply. Like, I know it sounds stupid because you're just kind of like tracing it, but you can just say, right, okay, this is what the market did. Work its way up, down, and then just grab your drawing. Go back to that. Grab your drawing, look at that, and think, right, okay, the market's kind of doing this. And then just look horizontally. What is it reacting to? Does it ever react to anything? Look on the charts. What does it react to? Use a rectangle tool and think, right, okay, this low, did that react to anything? It did. What happened there? And we'll go into in a few sessions time characteristics and stuff. But you know, it's a pre-boss candle effectively, or pre-boss area. They don't always work. There's statistics for each type, but essentially you're just marking out the flow of the market, and then when you get comfortable with it as well, go back to the candlesticks and think, right, where was my boss and chock? Okay, so where do I draw out the boss and chock lines? Just use a trend line tool and think, right, okay, we've got a breaker structure there, kept on going high all the way. So the previous breaker structure was this, that was my boss. I'll just call that daily boss. So where would my chock line be? Yeah, just to summarize really quickly, I'm going to have to shoot in a second, but between there and there, where would the chock line be? So if I draw it on, what would have to break? What would we have to break below to indicate to us that the market is definitely in a downward move between here and here?
So if we're in, because we've done it the other way around now.
Yeah.
So we're now in the upward trend.
Yeah. So the boss line was there. So breaker structure was there. We've had nothing but, continual highs, going up. So we need to find the chock line, which is the lowest point, isn't it? It's the lowest point. So that bit needs to be broken before we could identify and say, right, once this is broken, especially with a body break, we're now looking at a downward move. All right. So from here, all what I would say, just literally go through and mark out where the areas of supply and demand are. Just go to the previous highest point and see if the market continued. So go down, continue, there's boss, mark out the highest point. Did it react? Did it bounce off? Oh, a prime example of, what we were talking about earlier, where the old structure just turns into a bit of noise. All right, so that was our old chock line, which doesn't get used in the end because we already get our change of structure here. Sorry, change of character right there. So boss up, chock down, boss down, chock up, old. So we get the reaction and then we get the takeoff to the next area. So, initial reaction, we then get a boss out of there. We then get a chock down from here. And where are all of our supply and demand zones? This one was right there, but it got used up. And before long, like if you just carry on doing this, like I know it just seems like really tedious and a little bit boring, but you'll start to notice, like you will literally start to notice certain characteristics, certain things. So for example, we worked our way up here, went up, came down, probably reacted from something on the left. Oh my God, there's nothing there. Oh, there we go. Something. All right. Maybe not the best example. So we usually react from something on the left, came down, change of character, which indicates that we're now going downwards. All right. So any orders that we want to do want to be sells from preferably a profitable area. So price worked its way up a little bit. Did it react to anything? Don't know. Quite hard to read, really. It's just a wick. Price came down. We got a breaker structure. We're continuing downwards from here. All right. So let me just draw this on chart. Continuing downwards from here. Price starts pulling back. Do we react from anything? Again, just a wick. Not the best. Price came down, went back up again, came down. Then what happened when price started to work its way back up? Just a little reaction off of here. And then we broke through. Why did we break through here? It's like you will see sooner rather than later, the more times that you just go through the charts like this, just sort of continually, just go back, do it on EU, do it on pound Aussie, do it on any currency pair, do it on a stock if you want. Like, it all works the same. Maybe not stocks, actually, definitely do it on Forex. But the reason, or probably the reason why this one gave out was that there was no clear order block. It had been mitigated, this had come up and taken whatever liquidity it could from here. So there was nothing strong holding this. It was very curved as well. It wasn't aggressive like these moves. It was very smooth. So chances are when price comes back up to it, there'll just be a minor reaction, which is what there was before breaking through it anyway. But the reason why we don't pay attention to this one anymore is that we'd already had breaker structure and the change of character had moved. Change of character was here, not there. So this is now just, it's stupid money. It's like the guy stuck in the wrong direction. It's like, oh, like, you know, should I have shorted from there? Nope. Like off it goes. What did we react from? Turn it around, just look left. I couldn't even tell you what it's reacted from. Like, I don't have a clue. There's nothing there. You know, could it be these swap over candles? I don't have a clue. Maybe, but it's just something that I've not paid enough attention to with my own trading. Price comes down, what's it do? Breaks through, break a structure, break a structure. So yeah, just go through on your charts and get used to drawing out boss and chalk. Like, I think you've both got access to the main FTR group. Oh, what I'll do is I'll post through the videos which I think are relevant into here for you. Sorry, into our Discord. So I'll post the videos which I've already got, and then I'll recreate some new videos. But over the next few days, at least, just go through and mark out where boss and chalk is, and then just literally go to the extreme order block, which is usually the very last candle. So again, with this example over here, from there to there, the furthest point, the last candle was that white one. See, that white one, which we've got there.
I was going to say to you, you know, man, I've not got any of these. Even in the FTR group, I've only got the bits that we've got. I don't think I've got access to the.
Say again, mate. The sound went a bit funny again.
Sorry, 1 second. Sorry. Yeah, I was going to say, yeah, I've not got access to the other parts of the group that you've just mentioned. All I've got is
I'll bring you in. Yeah, I'll bring you into
cool.
it.
All right.
Don't worry about it. Right. Oh crap! I've got to go. I'm meant to be doing their call. I'll post if you want to jump on. We're going to be back testing last week's trades. So it's, there was, I don't know, 15R available last week, and a lot of us missed it, including me. I think it was called out by somebody, and I just dismissed it. Like, I wasn't in the right headspace, so I was like, nah, rubbish trade. That was the winner. It's like, shit, that was 10R right there. So anyway, yeah, I'll see you guys in there in a second. All right.
Thanks very much, Paul. Bye.
Yeah, thank you very much. Really good
Bye.
session. Thank you.
Bye.